So you're looking to buy a home in the Magnolia State? Well, first off, congratulations, because that is a massive milestone. But let's be real for a second. Finding that perfect house with the incredible wraparound porch, that is honestly only half the battle. The other half is making absolutely sure that your dream home doesn't secretly become a financial nightmare. So today, in this explainer, we are going to dive deep into one absolutely crucial tool, the Mississippi Mortgage Calculator. And we're going to uncover exactly why running your numbers through this tool is quite literally the most important step you have to take before you even think about making a purchase.
You know, it is incredibly easy to get swept up in the romance of homeownership. But the very first question we really need to answer is whether that dream actually fits your financial reality. We all do it, right? We scroll through those online listings late at night, we see the sticker price, and we do some, let's say, highly optimistic mental math. But buying a home is incredibly complex. The monthly cost goes so far beyond just paying back the money you borrowed. And if you aren't prepared, those costs will completely blindside you. Honestly, without a dedicated hyper-local tool to help you plan your money, you are essentially flying blind into one of the biggest financial decisions of your entire life. And here is a perfect example of why. Hidden fees, specifically closing costs, generally run between 2 and 5% of your total loan amount, and this catches first-time buyers off guard all the time. Just imagine for a second diligently saving up for your down payment, feeling great about it, only to get to the closing table and realize you are short by several $1,000s. There's absolutely no way you want to be in that position. These costs cover things like appraisal fees, title insurance, and local county recording fees. So if you're buying a $200,000 home, that's $4,000 to $10,000 you literally need to have ready in cash. A good Mississippi mortgage calculator factors all of this in early, so your savings plan is bulletproof from day one.
To borrow a thought from Dave Ramsey, a budget is telling your money where to go instead of wondering where it went. And that is exactly what we're doing here. A calculator isn't just a bunch of boring math. It's honestly an instrument of empowerment. By running the numbers, you take total control. You stop guessing. You shine a bright light on your potential debt, and you start strategizing.
So, here is our roadmap for this explainer. 1. Beyond the sticker price. 2. Anatomy of your payment. 3. The Mississippi tax trap. 4. Avoiding common buyer mistakes. And finally, 5. Taking control of your budget.
All right, let's jump right into part 1, beyond the sticker price.
I want you to think of your monthly payment like a giant iceberg. The principal and interest? That's the part you can actually see above the water. That is the money actively paying down your loan balance, building up your equity, and of course, covering the lender's fee for letting you borrow the cash. Actually, in the early years of your loan, because of a process called amortization, the vast majority of your payment just goes toward that interest slice. But then, you have the escrow slice, lurking right beneath the surface. This is basically a financial buffer holding money for your hidden property costs. Your lender collects this to pay your property taxes and your homeowner's insurance on your behalf. If you don't calculate this escrow slice accurately ahead of time, your estimated monthly payment is going to be drastically lower than your actual reality.
Moving right along to part 2, anatomy of your payment.
Now, you essentially have two main paths when structuring a loan, and choosing between them drastically shapes what you owe every month. First, you have a fixed-rate mortgage. This is your safe harbor. The interest rate stays exactly the same for the entire life of the loan, whether you choose a 15-year or a 30-year term. It's predictable, which is absolutely fantastic for long-term homeowners. On the flip side, we have the adjustable rate mortgage, or ARM. This one offers a lower interest rate right out of the gate, but there's a pretty big catch. After a set period, that rate starts moving with the market. It might go down, sure, but it could definitely go up, taking your monthly payment right along with it. It's riskier, for sure, but it can actually be a really smart move if you only plan to live in the home for a few years or if you know your income is going to jump up soon. A solid calculator lets you toggle between these so you can actually see the long-term impact on your wallet.
Which brings us to part 3, the Mississippi tax trap.
Okay, this is absolutely crucial. Generic, national calculators will completely fail you when it comes to hyper-local Mississippi property costs. To put this into perspective, let's look at some stark contrasts. If you buy a house in Washington County, you're looking at a property tax rate of nearly 1%, 0.98 to be exact. But if you drive just a little ways over to Issaquena County, that rate absolutely plummets to 0.29%. Meanwhile, places like Jackson or Hinds County sit right around 0.9%, and DeSoto is at 0.79%. The point is, buying in one county versus another completely changes your escrow requirements. And that is exactly why you need a specialized Mississippi tool that lets you plug in these exact local rates so you don't get trapped.
Let's dive into part 4, avoiding common buyer mistakes.
There are a few silent budget killers out there that can completely wreck your plans if you aren't paying attention. We already talked about underestimating closing costs, but what about HOA fees? If you're moving into a managed community, you're going to have monthly homeowner association fees. They are mandatory and they have to be in your monthly budget. Then there's PMI, or private mortgage insurance. Basically, if you put down less than 20% of the home's value, lenders view you as a higher risk. To protect themselves, they force you to pay a monthly PMI fee until you build up enough equity. A great calculator will automatically flag this and factor in an estimated PMI rate if your down payment is under 20%, keeping you from being blindsided.
Let's actually ground this in some real-world numbers so you can see what I mean. Say you're looking at a $200,000 starter home. If you put 10% down, so $20,000, you're looking at an estimated monthly payment of about $1,450. Now, step that up to a mid-range home at $350,000. Keep that same 10% down payment strategy, which is $35,000 here, and suddenly your monthly obligation jumps to over $2,500. And if you're eyeing a premium property at $500,000, even with a massive 20% down payment of $100,000, you're committing to $3,200 every single month. Tweaking just one variable changes everything, and seeing these scenarios played out is exactly how you figure out your true lifestyle budget. And finally, Part 5. Taking control of your budget.
Listen, before you ever make an offer on a house, you absolutely have to know the difference between a pre-qualification and a pre-approval. A pre-qualification is basically just a casual estimate. It's based entirely on basic data you just tell the lender. It's somewhat helpful, but sellers know you haven't really been vetted yet, so it carries very little weight. Pre-approval, though, that is a total game changer. That means a lender has actually dug in and verified your pay stubs, your bank statements, and your credit score. You get a formal letter proving you have real financial backing. In a competitive Mississippi housing market, combining a strict budget you built with your calculator and a rock-solid pre-approval letter is what actually wins bidding wars.
Taking absolute control of your financial destiny is incredibly straightforward. It really just boils down to 4 simple steps with the calculator. First, drop in the sticker price of the home you want. Second, play around with the down payment. Seriously, see how 10% versus 20% affects your need for that pesky PMI. Third, toggle the loan term. A 15-year loan means higher monthly payments, but you'll literally save a fortune in interest compared to a 30-year term. And fourth, input the current interest rate you're being offered. Just remember to punch in those local property tax and insurance numbers to keep your escrow estimate spot on.
So I'll leave you with this. What is your true buying power? It is time to stop guessing and start running your own Mississippi numbers today. Doing this before you purchase a home is absolutely vital so you can buy with total confidence. Finding your dream home should be incredibly exciting, not a stressful financial scramble. By truly understanding the anatomy of your payment, navigating those tricky local taxes, and leaning on a specialized Mississippi mortgage calculator, you turn confusing numbers into a clear, empowering plan. You won't be wondering where your money went. You'll be telling it exactly where to go. So get your numbers together, run your scenarios, and step into the market ready to win. After all, isn't peace of mind the best thing you can possibly invest in?